Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenarios and first the weekly time frame where we have a double 1-2, wave 3 is finished, waiting for wave 4 to end before then continuation to the upside. Common target area for your wave 4 is the 382 to the 05, taken from the low of 2 to the high of 3, giving you a target area between 57.5k and 53.3k, with the invalidation of this scenario being the 0.618 at 49.3k. On the 4-hour time frame, we're then looking for this diagonal structure in a wave C in a bigger flat. So we have a wave A to the downside, 3 wave B to the upside, and then a 5-wave structure to the downside in an ending diagonal wave C, which means that all of the waves have to be a zigzag structure. So A, B, C, 3-wave move, 3-wave in 3, and also in 4, and eventually in a wave 5. We do already have overlap between a wave 1 and the potential high over here for a wave 4, and that is usually a minimum requirement for the wave C. It's not a rule, it is a guideline, but it is nice to see as that is by far most common. The common target area for a wave 3 is nicely respected, the 786 to the 886 taken from the high to the low of 1 to the high of wave 2, and the common target area for a wave 4 is between the 382 and the golden pocket taken from the high to the low of 3, giving you a target area between 60.6k and 63.6k, with the uncommon target being the 236 to the 382 area, which is 59k to 60.6k. Now inside this area we do have some interesting resistance. First of all, I already spoke about it yesterday, the value area low and the point of control of this little range here. Now as you can see, we hit the value area low, acting as a bit of resistance, and then above we have the blue box here, 61,762.3k, a nice confluence with the 0.5 Fibonacci, and just above the golden pocket we have this blue box, 63.8k to 64k. After wave 4, we're then looking for price to move towards the downside in a 3-wave structure ABC to then finish wave C. And when we look for support, then we have some support at 54.4k, which is the daily naked point of control here. And we have even better support actually just below at 51.8k. Over here, the blue box, 51.6 to 51.9k. On the 1-hour time frame, we are then looking for corrective structures to the downside if we want to see price taking this low in the bullish diagonal. So therefore, a zigzag locally makes most sense because of this final push that we had towards the upside. So here what we can then count is a wave 1, 2, 1, 2, 3, 4, 5, 4, and potentially your 5 is finished, and therefore a wave C, which can either then be a first structure in a wave W for a double zigzag in a WX, and then a wave Y to hit that common target area for your diagonal, right? Because we didn't yet hit the white area, we did hit a part of a target area, but it's a bit less common. So potential W and then a wave X and a wave Y, double zigzag is on the cards, but by all means, after a wave C is ended, you would expect a bit of a retracement. Now the point of control just above price hasn't yet been touched, 60.1k, but as you can see, the value area low is acting as resistance locally. The alternative and most bullish scenario is that you have a triple 1-2, so 1-2 in green, 1-2 in blue, and then another 1-2 in white here, 3, 4, 5, finishing the blue wave 3, then another blue 4, blue 5, green 3, green 4, green 5. So basically we're then grinding towards the upside, and we don't want to see the 618 hit, which is taken from the low of 2 over here to the current high that we have, because this would be an invalidation for the blue wave 4 and invalidates this scenario. Now the probabilities aren't too great anyway, because this wave 2 here hit the 886, and the 886 is a rare target for a wave 2, common target for a wave B or a wave X, increasing the probabilities that the price action after an 886 touch is a wave C or a wave Y, which therefore increases probabilities to sooner or later move down to take the lows. On the macro time frame, weekly time frame, the bearish scenario is a regular flat structure where we have a bigger A, B, and looking for a C to the downside, preferably taking the low of wave A at 15k. The common target area for a wave B in a regular flat is the 1 to the 105, 69k to 74k taken from the high to the low of this wave A. But a regular flat is less common than an expanding flat, and an expanding flat wave B has a target area up here, the 1.236 to the 1.38, taken from the same pivots between 98k and 122k. Nonetheless, in a flat structure, we are looking for a wave C to the downside, which should be a 5-wave impulsive move. 1, 2, 3, 4, 5. Common target area for your wave C is between the 1 and the 1.236 trend-based fib extension from the high to the low of A to the high of wave B, giving you a target area between 60.5k and 11.6k, with the extension target being 6.5k. Best area of support is the golden pocket and also the multi-year volume profile value area high between 10k and 9k. For this bearish scenario, we are then looking for impulsive structures on the daily time frame, meaning we want to see a wave 1, 2, 1, 2 and a very big wave 3 to the downside. The minimum target for your red wave 3 would be the 1.618, but the probabilities are highest. You are going to extend far lower than this 1.618 for wave 3, and the 1.618 is sitting at 51.6k taken from the high to the low of 1 to the high of 2. Now what you can see is that this wave 2 hit the 886 as well, so same probabilities, rare for 2, common for B or a wave X, does increase the probabilities that the price action that comes after is corrective and not impulsive. Now if we then go to the 1 hour time frame, the most recent impulse to the downside is this one here. So we have a wave 1, wave 2 zigzag, wave 3, wave 4, wave 5. In this scenario, the common target area for your wave 4 is the 05 to the 0.236 Fibonacci taken from the high to the low of this wave 3, giving you a target area between 58.4k and 60.6k, with the invalidation being the 0.618 at 61.6k. So hitting this 618 here really reduces the probabilities for the bearish higher time frame scenarios and increases the probabilities for the bullish higher time frame scenarios. And of course, one of these bullish higher time frame scenarios is the one that I've already shown, which is the diagonal to the downside here, right? But the second one, which is the arguably most bullish one, is that we have a finish W, A, B, C flat in a wave X and then a wave Y. And this is where you want that triple 1-2 setup to play out, right? 1-2, 1-2, 1-2. And we want to see an impulse to the upside in a wave C to finish wave X in this particular scenario. However, locally in that bearish scenario, if we are looking for a wave 4 to finish and a 5 to the downside, we're also aiming for corrective structures over here. And that would then also be, once again, a zigzag to the upside because of this recent move to the upside here, where you can clearly count an impulsive structure. So here we're then waiting for this wave C to end, price moving to the downside. Hitting this 0.618 is important because that 618 invalidates the impulsive structure to the upside, which is this one here, right? Where the 0.618 is taken from the low of 2 to the high of 3. For an impulsive structure, we're just looking for another 4 and another 5. Another 4 and another 5. But in the more bearish scenario, which is both the diagonal but also continuation down in an impulse, we want to see an ABC and then eventually price hitting that 618 very soon to invalidate that potential impulsive scenario. Now with regards to the CVD, all of the CVDs played out and locally there's not much to be seen. We need a bit of a longer range over here, so patience is necessary. We do have some news today as well though. Friday over here, the 3rd of May, 2:30 p.m. Central European time and 4 p.m. Central European time. So make sure you trade safe around these hours as volatility might increase. And if we then look at the probabilities of the different scenarios, then on the weekly time frame, currently, the probabilities are highest for the bullish scenarios compared to the bearish scenarios. On a 4-hour time frame, also the bullish scenario, and then on number 2, the bearish scenario, where at the moment the diagonal based on the current grind we have here to the upside is very interesting, with the alternative being the WXY as shown, which is wave W, flat in a wave X, and then a wave Y to the downside before continuation to the upside. On the 1 hour time frame, the highest probability is also the bullish scenario, where pretty much in both cases though you're then looking for a zigzag to the upside before continuation down to take the low, unless we continue building higher highs and higher lows and we don't hit the 618, right? So actually what's happening locally is very important for the overall probabilities. And on the 15-minute time frame, probabilities, just because of this grind to the upside here, currently higher for a zigzag where we are aiming to finish a wave is C. And we of course then want to hit that 618 because it invalidates the bullish scenario. And on the number 2 spot we have the triple 1-2 impulse, 1-2 1-2 1-2, and we expect a very big wave 3 to the upside, maybe during the news later today, but we'll wait and see, right? We'll wait and see. Now at the moment, the reason why the probabilities on the 1 hour, the 4 hour and on the 50 minutes are a little bit higher for seeing this low taken is because we don't yet see an explosive move to the upside. If we have a triple 1-2 at the low, then what you actually want to see is eventually a very big wave 3 to the upside with volume increasing and price moving more like parabolic towards the upside. And at the moment, that's not really the case, right? So that is what impacts the probabilities at the moment, which makes the 50-minute probabilities aiming for a zigzag, the 1 hour the diagonal, and therefore the 4 hour also the diagonal. It's all related to this local grinding structure to the upside, where preferably in the more bullish scenarios, we want to see a bigger impulsive structure to the upside with volume increasing and not a volume decreasing, right? So that is something we keep an eye on, definitely not invalidated. By all means, the more bearish scenarios only get a bit more confirmation and probabilities if we actually hit the 0.618, which is taken from the low of the blue 2 to the high that we have at the moment, right? Because that is an invalidation for a wave 4. So if we're looking for continuation to the downside and price to take these lows, we want to hit the 0.618, and if we make a new high, we make sure that we pull the 618 from the low to the new high, and then we want to hit that 618 once again, right? As long as we make higher highs and higher lows here, we're going to be looking for bullish continuation. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.